You all have reached the Crypto Division's YouTube channel. I'm creating this today because yesterday the Federal Reserve issued $500 billion in injections into the repo market, and today they did it again. In total, over the next few days and coming weeks, they will inject likely about $1.5 trillion into the repo markets. And it's come to my attention that some people don't really understand what's going on here, which is fine. The economy is a complicated matter. But then they decided to go on to Twitter and chat about it. For example, AOC said, FYI, the amount the Federal Reserve just injected covers all student loan debt in the U.S. There's absolutely no reason for not pausing student debt collections, planning for mortgage and rent relief. We need to care more for the working people just as much as we care for the stock market. And Sanders also said something similar when he said, when we say it's time to provide health care to all the people, we're told we can't afford it. But if we're told that the financial markets are in trouble, no problem. The government can just hand over $1.5 trillion to calm the bankers. While that's a nice idea, it leads me to believe that both Sanders and AOC don't really understand what's happening here. And the bigger online communities around these types of individuals are also deeply wrong too. So allow me to explain. To begin with, the Federal Reserve did not spend $1.5 trillion. They did not spend even $1. This was not a bailout for the financial markets. It was not a handout, and it did not cost the American taxpayer anything. The reason why is because it's a tad complicated. The repo markets are where treasury bonds are basically bought and sold. They're bought by banks which need cash and are sold by the Federal Reserve, which is merely just a lender there. The banks exchange assets they need, and in exchange they get cash, and they need to rebuy those assets after a day or so, and in return the Federal Reserve gets a small bit of interest. The banks do this in order to fund their normal day-to-day operations. Without this market functioning properly, the financial markets would crash, because these are like the gears behind the financial markets and behind banks, and behind our entire credit, infrastructure. And without this functioning properly, the banks would not be able to cover their liabilities. Your average person would not be able to get a loan, and on top of this, there's like the coronavirus happening, Russia and OPEC's trade war, and then you might also have a crashed financial market on top of all of this. That is just very, very bad news. And the reason why the Fed decided to jump in here was because the spreads between buyers and sellers was widening here, and it became increasingly difficult for banks to trade with each other and find a good matching price for these treasury bonds. And so the Federal Reserve decided to step in and go, hey, look, we will provide all the money that you need here for these collateral treasury bonds, and and that prevents the short-term credit markets from drying up. And if we did not do this, obviously the credit would dry up, and you would have businesses not being able to find credit for their businesses, and banks would not be able to loan either. And of course, then you would have people being fired. So, ultimately, this was for the greater good of the economy, and it cost the taxpayer absolutely squat to do, and this is honestly just a no-brainer on the part of the Fed. However, it does come with a bit of costs because, for example, now the market is probably expecting a 0% interest rate, and this could also push them under that. But that's not too weird because globally we are doing that as well. And further, to prevent a actual recession or possibly even a depression, depending upon how big the supply shocks actually are from China and the coronavirus, we probably not only need more, possibly even QE from the Federal Reserve. We definitely need some fiscal policy too. But the main point here is that the Federal Reserve's $1.5 trillion injection into the repo markets was not a bailout. It was not a handout to the financial markets, and it did not cost them anything. And furthermore, this would not be able to fund just normal fiscal policy stuff. It could not fund like AOC's Green New Deal because that is not in the Federal Reserve's charter, thankfully. If it tried to, it would probably immediately be disbanded by Congress because it's in violation of their charter. So, sorry AOC, it can't fund your Green New Deal or relief all the medical debt in America. I mean, come on, you were an econ major. Like, what the fuck are you doing with your life?